today is Ask Me Anything Friday. So my plan is to go through and answer a lot of your questions. So go ahead and start putting them in the chat now. I do have some questions from the Discord that I want to go through first. These are from our alpha group members of Outlier University. And they actually told me, hey, Chris, we have some questions we want to ask you. And I completely forgot about it yesterday. So that's on me. But let's go through these questions here real quick from the Outlier alpha chat channel inside of our Discord. All right, so I asked them to mark them with little Outlier logos so I could come back to that. Okay, so Mikey Mike's question here. What does it mean when a stock shows no volume but plenty of open interest? So I do not look at volume. I think volume is a absolutely useless measure because I have traded so many times and nothing shows up in volume. Now, whenever I'm looking at my columns, this is what I set up: delta, open interest, extrinsic, intrinsic, bid, and ask, right? These are the columns that I look at. I don't look at anything else. This is everything I want to know, in fact. Open interest means who wants to transact with you today, right now. Now, there are times where you may go to, I don't know if I can find one real quick, but there's a chance when you go into an options chain, you'll see some that have like 0 open interest. Those are generally brand new strikes that just got added. Now, as it gets closer to expiration, they may have stock. Hang on, let me go to like Apple, probably is a good example. They would have $5 wide spreads most of the time, but as it gets closer to expiration, it's going to have 250 wide spreads and maybe even $1 wide spreads. No, 250 wide on this one. And so when you go to an options chain and you see like 0 and open interest, and then 500 and 0, and then 500 and then 0, and then 500, something like that, that means those are brand new strikes that they just added. You're probably going to have plenty of liquidity if everything around it is still liquid. So I wouldn't stress over that too much. But as far as volume goes, dude, I've traded it and watched it do absolutely nothing. And it's like, I don't know how useful this is. But what matters is open interest. Open interest is people who want to work with you now, who are ready to transact with you today. And that's what we're looking for. Let me see what other questions here. So this is from Mikey Mike. If I want to keep my total trades at 5% of the total account, and I'm planning on trading 3 stocks, I plug in 1.6% for risk. Okay, I got you. So the total comes to 5 divided by 3. If I'm trading 6 stocks, the entry would be 0.83 to keep the total risk to 5%. Does that make sense, or am I missing something? For sure, that makes sense. It totally makes sense, right? Because we're looking at how much risk are we willing to take on a single trade. And if you want your entire balance to be less than that, right? If you want all of your trades to be less than 5%, going to 1.6 makes total sense to me. I get it. Let's see, were there any other questions? This is Joe. You mentioned during the Palantir overview this morning that you'll need to adjust your trading plan. I missed what the adjustments were. Okay, so this is this actually I've made a couple. It's not that I've changed anything. It's that I've firmed up what I needed to describe. And actually, somebody pointed this out. I don't have outlier sell signal on here, so I need to add that as an exit point here. 6 outlier sell signal. So yeah, for sure, I need to do that. And this is why I haven't put a new version out, because we've made lots of little tweaks lately just for clarifications. And I don't want to keep putting new versions out because people are going to be like, oh, well, what's this version or what's that version? Right? I just want one version and that's it. Hang on. I need to go to the breadth. This is what this specifically, especially this week, is what I've been focusing on firming up and making sure that I have what I want it to say right here. So first, trade in direction of the bull list percent with the 10 EMA crossover, right? So if we're looking at, this would be the green line is our bull list and the 10 EMA is the red line. We want to make sure that the crossover is moving in the same direction as the trend of the market. Now, must match the market trend in order to continue. Got it. If the value is over 75 or under 25, only enter if breadth is still moving up / down on that day. So let's break that down. And you'll see why in just a moment. Like, this has been something I really wanted to firm up because we had a different circumstance than we've had possibly in years. The last time that we had a crossover this high on market breadth was back in, it was like November of 23. Yeah, way up here, November of 23. So I wanted to take a little bit of time and firm up what I'm looking for. So we had this crossover right here. and it came right on the back of it going over 75 and then contracting. So when it crossed over 75, so it went up to 75.59, 78, 80%, and then pulled back to 78. Now, when it did that, that is my signal to no longer take new trades. Halt new trades until the cycle cycles. Okay. So that's what this is meaning right here. If it goes over 75, only enter if breadth is still moving up. But once it changes direction, halt new trades. Wait for a new cycle. Then, if a reset occurs on the market, if reset, let me type reset cycle. If a cycle reset, if cycle reset occurs on the market, okay, let me underline that, on the market, you can trade the sectors that continue to rise and are bullish from the market reset date. See, I'm still editing this slightly. Now, I don't have to do this, but I want to do this. I want to do this to make it clear for me when I'm making my plan, and I want to do this when I'm making it for you. And if you are following along in my trading, or if you're trying to learn how to trade, I want it to be easy for you to understand. So if the cycle reset occurs on the market up here, you can trade the sectors that continue to rise and are bullish from the market reset date. Okay, meaning, let's go to, let me pull up another market breadth, because I want to show you what I mean by this on a different sector. So looking at the tech sector. All right, so the market reset date happened on May 8th. And on May 8th, right, it had peaked over, contracted, and then started going back up. So on May 7th to 8th, it was still increasing. 8th to 9th, still increasing. 9th to 10th, still increasing. 10th, or 9th to 12th, I should say. 12th to 13th, still increasing. And then 13th to 14th, it decreased. From 13th to 14th, it decreased. And again, if it contracts, that's when I'm no longer in. So the market reset that. That's why I was willing to get in. And that's why I made so much money in the last week, life-changing money in the last week. And you probably did too. I know a lot of our outliers did the same because they were following along and they saw the same thing. So I am super stoked that I was able to do that with you this week. Now, were there any other questions? Because that's what I wanted to go over, Joe. That's what I've been tweaking just for clarification. Okay, see if there's any other outlier logos I'm looking for. Okay, so there's Joe. Do I have this correct? The 10 EMA cross, no new trades today. Market. Did the 10 EMA cross today? It's real close. Let's see. The actual value is bullish at 71%. But it doesn't show the EMA value. I mean, let's zoom all the way in. Let's see what it does. If we zoom out. Oh, look at that. It's not quite crossed. It's really close, but it's not quite crossed. That's cool. Zooming in all the way like that. Discretionary sector turned negative and is at the 10 EMA. Market and sectors say close, so we go close GM today. Okay, so to that point, okay, let's zoom in here. If the sector and market breadth crossover occurs, that's when I close the trades. So we don't have a market breadth crossover just yet. It's really close, but not quite just yet. And then if we go to the discretionary sector, on the 10 EMA, not crossed over. It might have been on the 5. Yeah, it is on the 5, but it's not on the 10 EMA. So I don't have a reason to close just yet, Joe. Okay. See everything else. Oh, there's Mark. Okay, were there any other we may want to consider? Okay, so one of our amazing outliers has been building a cheat sheet for the whole process, and I believe that was Random Guy. Random Guy, you are not just a random guy, you are a rock star of a random guy. So he's been building us a cheat sheet. I asked him to email me that earlier, and I'm going to work with him to make it where it's a one-pager, which is awesome. I love how he's turned it into a flowchart. And I did put one version out in the VIP Investors Toolkit. They want to consider adding a requirement that the options contract is greater than 10, or yet maybe a limit 10 or 20. So that was actually something that, so I'm glad that this happened this week, right? I almost didn't take the Palantir trade because it was greater than $10. It was 1107, I think it was. But I was just like, you know what, that's close enough to 10, go for it. Now, generally in the past, $10 had been my personal limit on how much an option contract should cost. But I want to go for it, and it paid handsomely. So I really need to just throw that rule out the window, right? If it sets up, I need to go ahead and take the trade. Is basically what I'm saying here. And that's on me. I don't know how much money I could have had I not had that artificial limitation before. But you know, is what it is. So let's go to your chat, and I'm going to answer as many questions as I possibly can to help you out. Oh, I forgot. I have a new little pointer tool that I can use from now on. Yeah, there we go. How's that? Isn't that cool? And it even shows when I click something. Yeah, that's pretty cool, right? All right. Rick says less rules is better. Oh, I would disagree, actually. I think more rules is better because that way you know when something occurs. Now, let me put it this way. As you've seen, some little tweaks going on this week because some circumstances evolved that I needed to account for. Each one of these rules has had a reason for being created, right? Now, rules are not meant to be broken, right? These are the trading plan is what I use to make sure that I am going step by step methodical in my decision making. I would say that more rules is better, but it can be confusing, right? And so that's why you need to be sure that you're creating your own rules, because my rules may be confusing to you, your rules may be confusing to me. But there are going to be days where something happens you didn't anticipate, and you need to make a rule for that. That way, the next time it comes up, which is what I've been doing with the market breadth, right? The last time that this would have occurred was a year and a half ago. Now that it occurred in the last week, this is an opportunity to make some tweaks, make sure I understand what the plan is, so that in the next time that it happens, no question, I know what to do. So I kind of disagree, but that's okay, man. You can work on your own plan. And then that's what I always encourage is create your own plan and make sure that works great for you. Let's see. Going through, there's a million questions here, so I'm gonna do my best to go through as many as possible. Corey, the slides are available in the VIP Investors Toolkit, but they're not up to date. And like I say, I've been making tweaks and I don't want to have all these different versions out there. But I do like the idea of the cheat sheet being something I can continuously update and say like cheat sheet 1, cheat sheet 2, cheat sheet 2.3, right? I like that idea. Klaus is here from Denmark. What's going on? Danny has a great question. What does deep in the money look like in a long call option choice? Could you possibly trade a deep in the money long put option anytime soon? So deep in the money for me, so in the money is at your 50 delta. Always and forevermore will be, in fact, let's go to an options chain and do some options lessons here real quick. So deep in the money is where you're looking, you know, basically in the top left quadrant here on calls. On puts, your bottom right quadrant. Now, the price of the stock, so Apple at this moment, you know, pre-market, 211.45. The closest strike to that is 212.50. Man, this little cursor thing is great. I'm loving this. Okay. Now, looking at it this way, this is at the money. At the money is always your 50 delta, give or take. Give or take. Although, where's my delta in this idea? Give or take. It's not exactly perfect right here. Mainly because it's 0 days. Let's go to a different option chain. Here we go. 43 delta versus 57 delta, give or take 50 delta, because that's at 211, and this is the 210 strike versus 205 or 215. If you go deeper in the money, your delta gets higher, meaning for every $1 change in the stock, this will move $1. So if it's a 57 delta, that means for every $1 change in the stock, this moves 57 cents. If you move out of the money, for every $1 change in the stock, this moves 1 cent. Completely useless. Totally stupid to buy. Now, the question was, how deep is in the money? So to me, it's 80 delta. I think really anything 70 or 70 or Grady, 70 or Grady, of course. 70 or Grady, also known as greater in English, would be considered deep in the money. So that's what I would look like. But could you possibly trade a deep in the money put anytime soon? Only if the Outlier 9 lit up to tell me that, right? So the Outlier 9, think of it in baby steps, right? We take 3 baby steps first. Look at the market, look at the sector, and look at the stock. So when you look at the market, 3 baby steps there: the trend, the signal, the breadth. The trend, meaning which direction is the Outlier trend template showing. You can do that on any chart. You just go to the SPY, and you see the Outlier trend template's pointing up, right? Or if the Outlier trend template's pointing down, that's when it would be going down. So the 10 under the 20, price under the 50. And right, so going through this each time, right, looking at the Outlier 9 little baby steps, 9 itty bitty baby steps. There we go. Since I talk about my itty bitty baby brains, my itty bitty baby hands, and everything else. Just 9 itty bitty baby steps will get you to figuring out if a stock is a strong buy or a strong sell. I'm only interested if all 9 light up. So it could be a while, honestly, before any puts come through. Let's continue on here. Here we go. Sean, great question. Yesterday, exited Etsy due to an order block, but I don't see an order block in Outlier. So the Outlier order blocks are being recoded. I'll tell you, I'll be straight up here. Mahesh coded these in, and I don't like them. And so I was like, Mahesh, I don't like these order blocks at all. I don't think that they're working the way that they need to. So they're being recoded and re-upgraded here right now. So you're totally right. You didn't see them in Outlier. We did see them on TradingView, and you can add these scripts for free, which is so cool, right? Deep Thought has created a script over in our Discord. You can go down to the Pine script, TradingView Pine scripts, grab the Deep Thought script from here, and put this in your, I don't know where it is, but it's somewhere over here. You can put this in your account, and you can still use the free TradingView version and have the 10, 20, 50 and the ATR and the order blocks all in one indicator, which is so brilliant. I'm so impressed. So impressed that Deep Thought came up with that. Maybe the man in black, Johnny Cash, used to drink Guinness at the Markree Hotel or Markree Castle Hotel. Maybe so. Why did they name it that? Well, it's because he stayed there. It's because he stayed there. Okay. 80 is Grady. I like it. Brian, you look a little young to be trading stocks there, Brian. Are you sure? Are you sure about this? Do you buy a call that acts as a stop loss when you buy a call to open a position? You buy a call that acts as a stop loss when you buy a call to open a position. So I'm just buying, like, for example, when I find a trade, I'm only looking at buying, I buy the entirety of my position up front, right? Lump sum investing, if you want to call it that. I will go in with my full position size and buy as many as I need to on that strike at one time. I don't buy any extras, and the last thing I do is sell against that point. Actually, somebody asked about delta spreads yesterday, and after I got done barfing about how awful it is to do spreads, I actually got to thinking about how important it is to talk about the deltas on this, right? So let's say, for example, we're looking at the Apple June 6th 200 calls, right? Which is what I bought and then what I sold out of, and I am not at all irritated by that, but part of trading. So we're looking at the June 6th 200 calls on Apple. If we were to buy that today, that's a 79 delta, right? We understand that's a 79 delta. Now, let's say we want to be clever and make a spread. We don't like the idea of buying all of these. Okay, hang on. I'm about to go off the deep end here on spreads real quick. So call debit spread. I'm about to go off the deep end on some spreads. So this would be buying the call, okay? This half of it. In fact, let me draw a little bit better. Right. A long call looks like this, where you buy it and then it goes up and then it has unlimited profitability, right? It could go up literally forever. When you sell a call, it's the opposite. It's the opposite. When you sell a call, you have unlimited risk, but you are capping your upside when you add them two together. So when you sell a call, it looks like this, right? You have, I mean, it's the same thing, but an opposite. You can only earn so much and you have unlimited risk. So when I add these two together, you actually are working against yourself, right? You're limiting your possible risk, you're limiting your possible gains, and you're limiting your possible risk at the same time. So doing so, I just don't understand. I have no idea why you'd want to do that. So let's use this as an example. Let's say we buy the 200 calls and we're like, oh, I want to make a spread. So I'm going to sell the 210 calls against it. So when I had 80 positive deltas, meaning for every $1 change in the stock, my option price will go up 80 cents. I've now taken away 55 of those. Again, another reason why I do not understand why anybody would do this. And now my net delta is the difference between these two. 79 minus 55 is 24. So now I have a trade that is guaranteed to make less money as it possibly could. And for every $1 change in the stock, I'm only going to make how much? I'm only going to make 24 cents instead of 80 cents. That's so dumb. I have no idea why anybody would do this. Now, granted, at one point in my life, I thought it was genius. But now, at the other end of my life, where I'm actually making money, I'm looking at this like, why would anybody do this? This is so dumb. Taking a trade that could be potentially 3 times more profitable for every $1 move in the underlying stock, it will be more than 3 times profitable. 26 delta to 80 delta. Why would you even do that? Let's continue on here. Great questions, by the way. I'm so stoked that I can do this with you. Cassandra says, I just got approved for options. I've only been buying stocks to hold. This week was some of the stocks I bought. Was there a second part of that? I don't know, but that's okay. Cool. I'm excited for you to be able to trade options, right? Options are such a game changer. In fact, let's do a little bit of a reason why options are such a game changer. Let me pull up the position sizing spreadsheet real quick. So the position sizing spreadsheet is available in our Discord, and it's going to look exactly like this when you log into it. So let's say that we bought SMCI and we wanted to keep 5% of risk. Let me zoom in a little bit. We wanted to keep our risk limited to 5%, right? Now, this is probably different than most people, right? When you work with Outlier, the objective here is to save time, make money, and start winning with less risk. It's always about reducing risk. Always about reducing risk. So what is the first thing we look at when we are putting on a position size? How much risk am I willing to take? Most people out there, they don't want to think about the risk. They want to think about how much can I make today? How much do I want to make? I don't care about how much risk I want to take. I want to worry about how much risk I can, or how much money I can make. First off, that is the fastest way to lose everything. Focusing on how much you're going to make versus how much risk you're going to take, that's the fastest way to blow up your account. I am telling you from experience. Now, focusing in on how much risk you're willing to take. And let's just do SMCI as an example. To take 5% of risk in your account, you could buy, with a $100,000 account, you could buy 746 shares. 746 shares. That's a lot. It's a lot. And you keep a really tight stop. So if the ATR is 3.35, I like half of an ATR as my stop out point. So that would be at 42.28. So if the current price is 43.96, your stop out point is 42.28. That's half of one ATR. Now, when you keep keep your stops small, you can trade a lot bigger size. And so this would actually be 32% of your portfolio if you manage to do 746 times 43 divided by your account balance gives you stock percent size of 32%. But let's say that we bought an option in SMCI. So let's go do that real quick. And let's actually hold tight real quick. I'll tell you what option I own. We'll do that. I don't remember. I gotta go look at my broker. So I'm the proud owner of the June 6th 38 calls here. So these calls today are worth, let's call it 735. 735. So I could either trade the stock and take 32% of my account, or I could trade the options and take 6.62% of my account. Okay, big difference there. And then let's go to Palantir. Now, I've already rolled Palantir several times. Palantir is a risk-free trade for me. If you want to see how that was done, be sure you go watch the video where I talk about how you can have a risk-free trade in Palantir. I own the 122 calls, and they're currently worth 835. So that would be only 3% of my account, or 45% if I were buying the stock outright. Now, let's look at this. If I add these two together, that's 78% of my account in stock versus 9.96% of my account in options. And I'm going to get a very similar result between the two, a very similar outcome, very different inputs. Isn't that cool? Now let's add in GM. So these are the only 3 positions I have on right now. I am in GM, and I own the 47 calls, and they are worth $3.45. So this would be 163% of your account if you did it just purely in stock. 163% of your account versus how much of your account would this be? 17%. 17%. What a huge difference that is, right? Like GM alone, you could have 1,700 shares, keeping a stop loss of around 70 cents or so, 73 cents. So that allow you to get 1,700 shares. But those 1,700 shares are going to cost you 1,700 times 50 divided by your account balance, about $85,000. Now, this risk here is the entirety of your risk between the current price and the half ATR stop out point, $12.50. That's nothing. Nothing on a $100,000 account. That's nothing. You won't even notice that. So it is so important to look at the idea of trading options, because you can get a tremendous amount of leverage and allow you to put on more trades. And this is only 17% of your account to put these 3 on versus 163% of your account. Isn't that cool? Right? That's one of the main reasons that I trade options right there, is I can do so much more. I can do so much more with so much less capital. Pretty neat, right? Pretty neat. Great explanation of position sizing. Thanks. Cheers to you, Justin. Good to see you. Hi, Brian. Good to see you. New customer as of a few weeks ago. Outstanding. I bought an option with Google yesterday. Was everything lined up with that trade? Okay. So let's go through the Outlier 9. Let's go through the Outlier 9 for Justin real quick. So we're going to start with the market, and we're going to do 9 itty bitty baby steps with the trend first. The market trend. Let's go first into Outlier. We'll type in SPY. So we're in Outlier, looking at SPY. What we want to see is a green overlay. That's what we see right here. Now the green overlay means the trend template is bullish. Your 10 is over the 20, price is over the 50. Sweet. So we'll mark this green. We'll mark this green for Justin. Next, let's go to the signal. So SPY currently still has, let me zoom in just a minute, still has a buy signal that came on April 25th. So that's looking good right there. So the signal is also bullish. We'll mark that green. Next is the breadth. The breadth, if we look over here, I like the full stocks. You can look at different things. You can do the S&P 500, the Dow, whatever. But I like the full stocks. And we just talked about this a couple minutes ago. It is waning. Breadth is waning, but breadth is still technically bullish right now. So if we look at that, we're going to mark that one green as well. So your trend, your signal, and your breadth are all bullish on the SPY. Okay, let's go to the next step. So 40% of your move is due to the market. 30% is due to the sector. So let's type in Goog over here for you real quick. Now, aren't these itty bitty baby steps so easy? Right? Look, this is how I'm telling you. If you can get these 9 itty bitty baby steps down, you can look at a stock in 45 seconds or less and say strong buy, strong sell, weak buy, weak sell, or I want nothing to do with it. So it's honestly super duper easy. We just looked at the SPY, and you could have glanced at it and got those measurements. Now let's look at Google. We look at this one right here. This is the communications sector. Google's in the communications sector. The fear and greed is rising in the communications sector. So that's what we want to see. Fear and greed is going up. So we'll mark that green. Next is breadth. The breadth of the communications sector actually is not bullish. The breadth of the communications sector peaked on April 29th and is coming down and has even crossed under the 10 EMA of the breadth for that sector. Now let's describe what this chart is down here. So it starts with the green line, but then you can add in, and I did that right here and here, market breadth, the 5, 10, or the S&P 500 line. So I've added the 10 EMA right there. That's what that is. So this crossed over on May 8th. So on May 8th, we had a crossover bearishly on the communications sector. And we can see that right here in the market breadth tab. It shows you all the sectors at once with the 5 or 10 EMA crossovers. Let's just go look at this one real quick. And we can zoom over to today, add the 10 EMA. So this chart here is this chart here, the 2 lines. Now the background, this is how many stocks in that sector have a green overlay, meaning the outlier trend template's bullish, or a red overlay, meaning the outlier trend template is bearish. You look back here, every single one of them had a bearish overlay. Every single one was bearish. Over here, we've got 70 with uptrends. So you can look at this number right here, it'll tell you. 70 with uptrends and 22 with downtrends. And that's the exact same chart as this. So we're stacking these 2 charts to make this chart right here. So actually, the breadth, I would consider bearish. I would consider this breadth to be bearish. Oh, that was the wrong one. Next, let's go to the stock. So we've looked at the market, we've looked at the sector. And now, of course, I've talked through all this, but you could do this within 10 seconds. Next, the last 4 itty bitty baby steps. Look at the trend of the stock itself. Green overlay means it's in a rising bullish trend. Okay, good. Next, let's look at the signal. The signal, got a buy signal on May 15th, outstanding. Next is the fear and greed on Google itself. The greed bottomed, the fear bottomed here on May 13th and is starting to move back up. So it's getting less fearful, more greedy. That's what you want to see. And then lastly, outlier blocks. Now, I mentioned how you can get this for free. If you go in our Discord, I know, Justin, you're a customer, so you have access to our Discord. Go to the TradingView Pine Scripts. Deep Thought has a version in there that you can use in TradingView for free that has everything on my chart right here, except for my notes. And then let's go to Goog. And Goog does not have any order blocks, any outlier blocks in the way. So that would be green there. Okay, so out of all of these, we have 8 out of 9 of the Outlier 9 in those itty bitty baby steps, as you saw, really easy to see. I'm telling you right now, this is, if you can do the Outlier 9, this is stock analysis on a level that professionals use. This is stock analysis on a level that everybody else on YouTube wishes they had. Okay, itty bitty baby steps. 1, 2, 3 on the market, 1, 2 on the sector, 1, 2, 3, 4 on the stock itself. Now, doesn't mean that the outcome will be positive, but it means you have everything going for you. You have a bigly strong buy if all of them, all 9 are lit up. Now for Google, that was 8 out of 9. So I would even consider that a strong buy as well. Now, for me personally, I'm only looking for 9 out of 9, but 8 out of 9 could work great for you. That's where you've got to come up with your own trading plan and figure out what works for you, what doesn't work for you. And I can tell you right now, the Outlier 9 is going to work for you. It's going to work for you. It can't guarantee the outcome, but it does at least put you in the direction of what the stock is doing, So fantastic question. Thank you for allowing us to go through the Outlier 9. Let's see. Paul says, Chris, could you give an explanation and how many option contracts you would have bought as opposed to the share count. Oh yeah, it's just right there. It's just right there in the position sizing template. Actually tells you right there how the option size to be contract size, right? So instead of 746 on, was that SMCI? Instead of 746 on SMCI, it would be 9 option contracts. Now, the way you get to that is by putting in your option delta. So let's go to SMCI again. We're on SMCI. Let's say that it was a 78 delta. You could go in here and you could say 78. So instead of 9, it would still be 9. But if you went to a different strike, maybe down here at like the 62, maybe you bought the 62 delta, that would be 12 instead of 9, right? Or let's say you get really crazy and you decide to buy out of the money 27 deltas down here. You're like, yeah, dude, for sure, I want the 27 deltas. You can buy 27 of those, right? Now, I can't tell you what to do, but I would not do this. I would focus in on the 80 delta because that's what I like. And that's why I say you focus in on what works for you and roll with that. Come up with your plan, and there you go. Let's see. What's the next question here? Oh, Corey, you're super welcome. Thank you for making the explanations simple and the analogies. That's my job, literally my job. Paul says, thanks, makes sense now. Very cool. Let me see, are there any other questions? Hey, there's Random Guy, who's making our cheat sheet. Random Guy is randomly awesome. So he has the same position as Cassandra felt. I choose to follow Chris's trade so I'm learning rather than holding on to stocks that could have turned into bags. Yeah, he doesn't want to be a bag holder. What's up, Bobby's World? Good to see you. What does fear and greed in the sector or stock represent? Outstanding question. Let's go to my slides real quick. So this is what Outlier is, like our big selling point here is we can see the price of the stock. We can see the volume of the stock, but what we can't see is how many people are screaming sell, how many people are screaming buy, and where those turning points are, right? Where those turning points are. And so in Outlier, it shows you where they're starting to scream sell, and then less people are starting to scream sell. And when you look at the price of the chart, not all that much has happened, yet you can see how much fear was coming in and how much fear evaporated. And honestly, the price was the same here as it was here, yet there is significantly less fear. The price is the same here as here, but significantly less fear. And then you look here, the same price as it was here, and people are getting way less fearful and starting to get more greedy. And this is showing on average for the sector of what that looks like. I think this is a great representation, right? You can see all the way across here how the fear was so strong, came up a little bit, the fear got really strong, and we're at the same price. And now we're starting to move almost out of the fear. That's what we're trying to show you here. And it is voodoo. Nico, can you buy a long call 10 delta and a long put also 10 delta? Finding a combo where put less call is profitable, letting them both expire and pocketing the profit. Okay, so let's say a long call and a long put, 10 deltas. All right, let's clear this out. Let's go to 10 deltas. Here. Let's go to 10 deltas over here. Right. I think this would best be demonstrated in a different tool. Hang on. What is that? Option. Wait. No. I can do that inside trade here. Here. Then we go to send to what if. This one? Send to what if. This is really handy, actually. And then, there needs to be a zoom function. Where's my zoom function? Hold tight. This is actually really cool. Let me figure out where that zoom function is real quick. That's partially. Oh, here we go. Just roll my mouse. Hold tight. I really want to show you this, but I'm struggling for a second. Play. Feed. Okay, that's what I want to see. No, go to the end. That's what I want to see. I want the end date. Hold tight. This is exactly what I want to see. Give me just a second. There. Okay. So what this is trying to show you here is that you are unprofitable completely everywhere at whatever price in between, unless it gets all the way out to, geez, this is not working like I want it to. Hold tight. Optionstrat.com, I think. Yeah. Build. Let's just do long call. And then we do a long put. Hang on. This is going to make sense in just a moment. Give me just a second here. Buy put. This is SMCI. We're looking at the 65 calls and the 30. We'll just do 35 puts. 65 calls and 35 puts. Okay. Now visualize this for me. Come on. Yes. And then I need to zoom. There. That's what I was trying to do. This is exactly what I was trying to do. Okay, finally. Apologies for taking so long. So current price, right around here. Now it has to go way, way up to make money, or it has to go way, way down to make money. There is no money being made in betwixt those 2 points. Not possible. What you paid for it will be your max loss. But if it does crash up, you'll make some money. If it does crash down, you make some money. But there is no way that you're going to sit anywhere in here and be profitable. Not possible. Letting them both expire and pocketing the profit. No, not going to happen. Now, if you sell them, which I don't recommend, but the thought is, hold tight. Let me see. How do I change this to sell? There we go. If you sell them, yeah. If you sell them and they expire, then you do get to pocket the profit. That is truly a thing. So this would be called a short strangle. So selling one out of the money call, selling one out of the money put, and keeping the premium that you sold them for at expiration. Now, this sounds great in theory, right? You've got, it can move up, it can move down, it can do nothing, and you're profitable. And that was what I got suckered into. This right here is exactly what I got suckered into as to why selling options is so brilliant. The problem comes when it does move so far up, or it does move so far down. And now I have a loser that's 6, 8, 10, 12 times as big as any of my winners, which means I now need 6, 8, 10, 12 winners to make up for one loser. The way to make money doing this is basically referred to as picking nickels up in front of a steamroller. Because yeah, you're going to pick up lots of nickels, but eventually that steamroller is just going to run you right over. And is the university also relevant to swing trading and not just options, which to be honest, I'm not interested in. And everything I do can be done with stocks. But your capital is used so much more effectively with options. So the answer is yes, of course. But if you want the greatest capital efficiency to be able to make your capital work that much better, let's show this example one more time here. To be able to have 19% of your account, oh no, that's not it. Here, 17% of your account being used versus 163% of your account being used. I mean, that's capital efficiency to a T right there. I mean, that's like 10 times more capital that you have to put up to get nearly equivalent outcomes. I would not be interested in spending 10 times as much, but it's a great question. And that's why I like to share this with you. Rodolfo says, please teach us this stuff as babies, just since learning options, got lost on rolling options, and this is even more way out there now. Try my best, dude. I try my best. That's what the university's for. Surfing Bird says, hang in there. You got this. Great question, Wes, when you roll, do you go for a credit or a debit? Always go for a credit. If you're rolling, and you're getting a debit, do not take the trade. You are adding to your risk. If you are rolling and you cannot get a credit, do not take the trade. It might even be worth closing the trade at that point. Roll should only be done for a credit because it reduces risk. It reduces risk by giving you more money in your account. It reduces risk by saying, okay, I put this on, it originally cost me $5. And if I get $1 of credit back, now it's only cost me $4. And if I roll again, now it's only cost me $3. And I now have those $2 that I just got credit for that I could go back and trade with my account. So I've reduced risk by doing so. If the only way you can do it is for a debit, do not do it. Do not do it. Our SMCI 38 calls are ripping. Oh, look at that. Up 7% this morning. Let's freaking go. So yesterday, this is such a great example as to why you need to follow your plan. Thanks, Hangs for Fun, for pointing that out. Yesterday, people in our Discord were absolutely going apeshit, saying SMCI was going to crash. SMCI is all over the place, right? And I really tried to give you guys some perspective of follow your plan. And a lot of people talked about how they sold out and they're so frustrated yesterday that it came down and then came right back up. Whenever you follow your plan, you don't have to be frustrated. You look at it and you can say, okay, did I follow my plan? Yes. Did I drive from Dallas to Disney World? Yes. Now, I had every exit along the way, just like you had every exit yesterday to take this trade. But if you follow your plan, then you're going to get to your destination no matter what. We can't choose what the outcome will be. We cannot choose, oh, I am going to take $2 out of SMCI. It may never get to $2. You can't look at SMCI and say, my profit target is $53 because it may never get to $53. All we can do is follow our plan. When you follow your plan, there's no regrets. When you follow your plan, you get to make sure you enact what you wanted to happen because you determine that ahead of time. A few more questions here. Arnold says, on Outlier University yesterday, there was a question about which broker to use. I use Charles Schwab. It's very powerful and super user-friendly. That's great. Thanks for sharing. And Georgia says she's a Schwab snob too. I love it. So Chris Mattingly says, SMCI is showing a divergence warning. Does anyone agree? So Chris Mattingly, I would tell you, I wouldn't go out looking for people's opinion, right? Because I'm bullish SMCI. I am totally bullish SMCI. I own SMCI. I might not by the end of the day, but as of right now, I sure as blazes do own SMCI. You don't want my opinion. I would tell you, create your plan, follow your plan. Don't go seek out anybody else's plan. Because what do they know? Only Chris Mattingly knows what's the best thing to do for Chris Mattingly. Now, for a divergence, I mean, if that's part of your plan, then it makes total sense. But if a divergence had nothing to do with your original plan, why even worry about it? And I know that this sounds so flippant. Trust me, I get it. I get it. But a lot of times people are looking for confirmation. People are looking for someone else to tell them it's a great idea. You don't need that. You don't need anybody else. You are in control of your own trades. And by having that plan, you can drive from Dallas to Disney World. You can get in and you can get out of your trades and have no regrets at all. No regrets at all. Georgia has a great question. Let's say Apple starts taking off. Is it okay to get out of a stock and then get back in? Yeah, why not? Why not? I won't. Now, I got out of Apple yesterday because I thought it was going to close under its 50 EMA. And unfortunately, it bounced back, and I would be holding it this morning, but I'm really not worried about it. It was 0.74% of my account that it took from me. I'll be just fine. And so I'll just go somewhere else. It's okay. King Arthur, or some royalty among us, says, I love learning and earning with Outlier. Hey, do me a favor in the chat. Would you mind sharing some of your wins this week as we're learning and earning together? Please in the chat, share some of your learning and earnings. I'd really like to know, right? Because our objective here is to help you save time, make money, and start winning with less risk. I'd really like you to share some of your winnings this week so we can show King Arthur exactly that. Patrick says, good morning, Chris. Has it ever happened where a stock really craps the bet intraday and it goes way below your stop loss and it makes absolutely makes absolutely 0 sense to sell it. I thought it was going to say something else. So let's use SMCI as an example. You buy it, it goes way down, and it goes down so much that it makes absolutely no sense to sell it. Patrick, I don't know what world that would be a possibility, because if it goes way down, let's look at AMD. A lot of people, now, granted, AMD has been on a little tear lately, but let's keep in mind here. Let's keep in mind, it's still way down year to date. Way down year to date. And way, way, way down from all-time highs, okay? Does it ever make sense that it goes down just so low that you won't sell it? I suppose if it's 1 penny, because I've already lost everything I possibly could, I can't lose anymore. But a lot of people are saying that in AMD. Oh, it's already gone down so much, it can't go down any further. It's already gone down so much, it can't go down any further. It's already gone down so much, it can't go down any further. And it went from 170, 160, 150, 140, 130, 120, 110, 100, 90, 80, and into the 70s. AMD on April 8th was a $77 stock, if you can believe that. Now, to some people, every one of those $10 increments where they were saying it can't go down any further, I have to buy it here. Have to buy it here. And then it continued to monkey hammer them all the way down. I haven't done this in a while. It continued to monkey hammer them all the way down. So you do you, my friend, but there's not a chance that there's ever something that goes down so far that I would just be like, I'll hold on to it. Actually, I'm going to pull out a slide. It might hurt your feelings. I'm sorry. But Mark Minervini, one of the greatest traders of all time, one of my mentors, says, there's no shame in losing money on a stock, but to hold on to it and let it get bigger and bigger, or even worse, to buy more, that's amateurish and self-destructive. Losers average losers. Yeah, it's a hard thing to do, but sometimes it's the day to take the opportunity to turn your small losses back into cash before they become big losses. You don't want to let that opportunity pass you by. It's a super handsome guy who said that, like undeniably handsome. Let's see. Sharing some of your stories here. Sean made over 100% on Datadog and Palantir and Hood. Yeah, exactly. Hangs for Fun said he made 87% in Robinhood, 105% on Datadog, and 124% in Palantir. And SMCI is heading up even higher, right? This is what we're here for, to be able to do this with you, to help you save time, make money, and start winning with less risk. And a lot of times, it's just sitting in cash. A lot of times, trading is just sitting in cash. Trading is not meant to be fun. Trading is not meant to be exciting. Trading is meant to be effortless. By having the OVTLYR 9, those 9 itty-bitty baby steps, you will be able to tell if it is working for you. And of course, develop your own plan, figure out what you want to see happen in a stock, and then execute on that. Elsewise, don't do anything. So if you're ready to save time, make money, and start winning with less risk, you should probably watch one of these 2 videos. I'll see you later. We'll talk soon.